Okay, everybody, welcome to an early Easter weekend edition of the weekly roundup with Ben
Yes.
and Scott. He's Ben, I'm Scott.
Yes.
And Thursday. What's going on this week besides Elon Musk trying to take over Twitter? What's going on this week?
Well, you get your chance this week to talk about Elon Musk because we didn't last week. So here's your moment. Here's your moment.
What was he doing last week?
Well, it was Twitter last week as well.
Okay, it was, yeah.
But there's probably been a fair bit of noise from that announcement to where we are today. Last week, the stock was trading, I think 41, went to 51 when he announced his 9% ownership. Then he was going to sit on the board, then he wasn't going to sit on the board. Yeah, so we had that dance and ebb and flow. And then last night, of course, he announced he was going to buy at 54.20, which sounds like a random number that he thought up in his sleep last night. Mm-hmm. And the stock opened at 46 today. So obviously the market thinks it's not a high likelihood that he's actually going to try and do that. So yeah, lots of buzz around that. Other talk about Google's putting together a competing offer to buy Twitter as well. So lots of noise around it.
Why do you think there's all of a sudden all this interest in it? Mostly just because he's interested in it. Now everybody wants to buy it.
Twitter?
Yes.
I think it has the potential to be pretty undervalued here because it is kind of the town square, so to speak. Mm-hmm. And so I think there's maybe a lack of attention to it over the last number of years with Jack Dorsey running a couple of companies at the same time. And then Jack stepped down earlier this year or late last year. So I think we're starting to get a lot more attention to it now because, probably 2 years ago, right? Facebook would have been the place where a lot of the attention had been driven, the potential Russian influence over what was happening in the elections. And now it seems that Twitter is really that place where people communicate and much more used for news and consumption now. So it's getting a lot more attention. And, people like Elon who have big followings on there, I think have a little bit of frustration with not being able to influence what happens there. So yeah, lots of attention pointed at it as I say, the town square and potentially the news feed of the world, so to speak.
Yeah, I mean, 43 billion seems like a lot, but it kind of reminds me of when Facebook bought Instagram for $1 billion. Everybody was up in arms. Oh, they're never gonna recoup that, and Instagram quickly became one of the biggest platforms. So kind of has that feel to it. But who knows with Elon? He's a bit of a loose cannon, I think. So
seems like, and part of it is taking the attention away from Tesla and other things like that.
Very good point as well.
Yep.
Yeah. What else in the world is grabbing your attention this week, or did?
Yeah. Obviously, I mentioned last week the Bank of Canada had their rate announcement this week. And so, as I said, I think in last week's weekly roundup, I said high probability of 50 basis point increase. So yes, of course, they did that. And just for a point of reference, which I did put in my daily, but I'll mention again, the last time they did a 50 basis point increase was early in my career in May of 2000. Subsequently after that, we went into pretty vicious bear market. So it doesn't necessarily mean that that's going to play out this way again. But the last time they went aggressive like this was because they felt like they were too late, like they did with the tech run up of 99, 2000. So they went 50 basis points, but ultimately, you would think then, of course, that would be a massive increase in bond rates, but the 1 year bond coming into the announcement, I believe, was kind of 205. We end the day here at kind of 212. So maybe a 7 basis point increase, like a 0.07% increase on the announcement. So, a very small reaction to the 50 basis point increase. And so I think not too much has changed in my view based on what they've done. And Tiff Macklin said, we're going this quickly because things are good and the economy's good and employment's good and there's nothing to worry about. But if we fast forward 12 months ago, Tiff said, nobody needs to worry. We're not going to raise interest rates until a minimum of 2023. And so here we are 12 months later and rates have gone up 75 basis points since the start of the year. And so while, we look at what they're doing and what they're saying, but try to still interpret it and say, what's the likely outcome of what they're doing? And the outcome is they're tightening financial conditions super aggressively. And so the question that I continue to battle with and continue to discuss is, why hasn't the market reacted to that yet? And the answer is, it just hasn't yet. But financial conditions are tightening aggressively, and that has an impact on leverage, which would be everything, every type of asset in the world. And so housing being the largest GDP input in Canada, I think will play a material part here. I mean, you saw the Canadian banks obviously rejoice by raising their rates the same day. The short-term rates the same day. So, not too much changed from that picture or from what he said, except I think that they're tightening financial conditions into a slowdown, and that ultimately results in some things breaking faster than we would expected them to. Nothing's broken yet, though.
Gotcha.
Yeah.
I'm going to, so as usual, if you want to ask a question, please do. We did actually get a question earlier on today via email from Eric, and I think this rolls into this section the best. He's just looking for an update on what you see in the months, years ahead for oil, natural gas, and uranium sectors. So maybe you could speak to that a little bit.
Yeah, so it's a great question. And, maybe I'll bring up I only got 2 slides today, but I might bring up the one slide, because it kind of, part of why I posted it is it seems to kind of match a little bit to do with the question related to future pricing on energy. So just bear with me. I'm going to pop that up here on the screen.
Okay.
And then we can talk through that.
Sure.
Yep.
This is throwing me for a loop, though. We're out of sequence. We got the question, and then we got,
Yeah, exactly.
Okay.
I get it.
Hey, we're doing this on a Thursday too, so it's like Bizarro Day.
It is indeed. So give me a second. I will. You might briefly see another screen, but all right.
Yeah, you got Thompson up there. Yeah.
Okay. Yeah, briefly, but then hopefully the other one jumps up there. We got it?
Not yet. Still Thompson.
Oh.
So for everybody, this is what we see when we're looking at all the different companies. A lot of green up there.
It's nice.
Yeah, some days it's all green, some days it's all red. Some days it's a bit of both. So we didn't get that slide up there.
All right, we're gonna try one more time here.
Yeah, sure. There you go.
All right. Okay, perfect. Thanks. Yeah, so this is a quick kind of snapshot on commodities. And so what this shows is a view kind of the backwardation of commodities. And so what backwardation means is that what's the current price versus what's the future price. And so in an environment where I think would expect higher future prices, we'll say normal economic times, you would have, again, an upward sloping curve, which would be contango. But what we have is backwardation, where current prices, like short-term prices, are higher than future prices. And so to answer Eric's question, but also maybe more to answer kind of what the market is seeing from what's the likely outcome of commodities over the medium term and short term. And certainly over the short term, higher prices. We have higher prices. Everyone sees it at the pumps, and with the inflation numbers and with any other commodities that you want to buy, we have elevated prices based on a squeeze, a supply issue that's happening in the world. Some of that's related to Russia and Ukraine, and some of it's related to just kind of the buildup from COVID. So, based on what the market is saying, anyways, the market is saying that they expect future prices to be lower. So that would kind of indicate that future profitability would be lower for the companies that own those assets. And really, kind of my view on longer term, I think you referenced, I believe you said oil, natural gas, and uranium.
That's right. Yeah.
Yeah. So, oil, I think, is going to be specifically related to what happens in the economy. And my view is the economy slows. And so I expect oil prices to be lower. Nat gas has the outside influence of what's happening with Russia right now and Ukraine. And Russia pumps obviously the natural gas into Europe. And uranium, I think it's going to be interesting to see how it plays out. Uranium's a pretty tight market as a result of only a handful of people owning most of their uranium. There's been a couple of ETFs or trusts, we'll say, that have been acquiring a lot of their uranium output as well. So you got a kind of a controlled, concentrated market. And as you see some of the world start to shift a little bit more to back to nuclear energy, potentially see another uptick in uranium. So I'd say uranium cyclically probably goes higher. Oil, I think it probably slows down with the recession, and nat gas ultimately I think slows down, but not until we see kind of that alleviation that's going to happen in the market once they come to an agreement with the war that's presently happening.
Gotcha. So you got inflation, you got deflation, you got stagflation, and now you got backwardation.
It's an education piece of the day.
It's like bullish, bearish, hawkish, dovish, right?
Sure. Yeah. I mean, I think that the financial media likes these strange words and thoughts, and it's an incredible encyclopedia that we could build one day. But yes, so all it means is future prices are higher, or current prices are higher than future prices. That's it.
See, you should have just said that. Less confusing. Right?
Yes.
Okay, that was good. So hopefully, Eric, that answered your question. Do you have more to add to that, Ben, or are you good?
So I'd say I'm good on that side of things, but since we're kind of talking a little bit about Russia, I'd say one of the more interesting things that came out, I guess it was 6 days ago now, when Russia announced that they were going to peg 1 gram of gold to 5,000 rubles. I did see it and probably didn't reference it this week when I should have, but it was an interesting announcement that they made. It actually has helped stabilize the ruble. And if we've been following along what Putin's been doing, he's been talking about, you want the natural gas, you have to pay in rubles. And so it's an interesting development to the currency. It's actually, really helped the ruble essentially take back all its losses that happened when the war first started, and essentially got back to where it was versus the US dollar at the start of the war. So that was an interesting development that they've done, and I think has an impact and kind of puts a floor under the ruble, but also puts some more strength to gold right now.
Interesting.
Mm-hmm.
Okay.
Since we're in the presentation here, I just had one other slide to show today, and so maybe we can just hit on that before we go into anything else.
Hey, Ben, this is your show today, bud.
Yeah.
You're just steering it all over the map here. Okay. You just go with it.
That sounds good. Yeah, so this is obviously a busy slide, but one that I've put up before, and it's really the input of all of the economic indicators. And so, as I said in my daily today, there is some kind of a disconnect between what the central banks are saying versus what the economy and the consumer and small businesses are saying, and big businesses too. I mean, we saw JP Morgan come out with minus 42% EPS. We saw Goldman Sachs have, I think, minus 25 today, and Wells Fargo minus 21 yesterday. And then, you got small business confidence at an all-time low. Like, this is historic ever in the history, all-time low from small business confidence in the US. And we have input costs, which is PPI. So input costs in all this businesses on the inverse have hit an all-time high. So we have all of these economic factors that you're looking at and seeing showing flashing red lights, yet central banks have their foot on the gas for trying to stomp out inflation. So ultimately what that results in is you see these signals here, which are all of these blue things. All of these blue things are a deflationary forecast. And so as we look down here, these are the countries by country. So you can go US, Australia, Austria, Belgium, Canada, all of the different countries around the world that are being tracked. They're all showing this is April, May, we're starting to see the numbers really kick in, and then June through the next year show deflationary numbers. And so these are the economic numbers. And so as I try to set up portfolios, I'm trying to look ahead for what the future economic numbers are. And, historically you would be kind of 6 months out. But I think now that we're kind of 2 months out from these massive deflationary factors, everything is flashing red, at least from what I'm viewing and trying to understand, and saying, we're seeing a slowdown. They're tightening financial conditions faster than they ever have. Yeah, at some point these things have to come to a head, and that's what we're trying to position for. As the one call out would be this one green one, which you would see here, that is China. And so it looks like China may have, they've already gone through the deflationary period, and we're starting to see maybe them start to come out the other side. But as for a whole, we're showing the global economy slowing simultaneously into a tightening financial conditions. And that's why I continue to say you want to have US dollars, bonds, and gold in that backdrop. It hasn't paid off for us yet, but as we look ahead, and our objective is to try to put that portfolio together for what's happening in front of us, the signals continue to say to me, this is how you should be positioned.
So are we, from a macro perspective, are we still in a quad 4 then?
I think we have probably one of the deepest quad 4s that we've seen ahead of us.
Okay, great.
Yeah.
Well, not great, I guess, but I guess we think. Okay, good stuff. So that's it for the slides?
That's it for the slides. Yeah, we didn't do a crypto or a blockchain slide today. I didn't find anything super interesting. But the only thing that I'd comment on crypto, which I think I did put in the daily, if I didn't intended to, is that the Ethereum change from proof of work to proof of stake has been pushed again. It was initially set to, for the 4th or 5th time they've pushed it, but it was intended to launch in June, but it's not quite ready. So they've pushed it back to a September launch. Which again, as I've said, ETH is such a kind of big super highway. It's important that it's done right and they don't screw it up the first time. But that continues to be the top priority for Ethereum right now, is to shift from that proof of work to proof of stake. Not only from a long-term viability of it, but that's a huge reduction in energy costs. So that's part of how I think it gathers some more kind of ESG attention as well.
For sure.
Yeah.
Okay, maybe we did skip over the what you got up to in portfolios this week, but why don't you just blend that together with kind of this weekend, next week, considering they're both shortened weeks.
Mhm.
Oh, is it a shortened week next week in the markets?
No,
Monday is it closed? No, it's open.
no, yeah.
Okay, that means Ben will be working. Scott and Joy will not be working. Kidding.
Exactly.
We'll be working as well. Go ahead.
Yeah, so there from a this week perspective, there is a ton of option expiration today. And so as we see those options roll off, that tends to mean there could be some potential more volatility next week. And if you what that means, I guess, from an institutional level is there's a lot less protection that the institutions have rolled off. And so I would say that there's a potential for increased volatility, with Monday being a kind of a quasi holiday, and today was certainly a working day, but volumes were light. You could get some pretty big price movements next week. So I'd be watching for that. But as we come into kind of the heading towards the end of April, we have the Fed meeting coming the first week of May. So the likelihood of a 50 basis point increase there again is quite high. I mean, it's as much as priced in similar to the Bank of Canada. So anything less than 50 basis points or more than 50 basis points, assets move quite violently. But I think I'd expect that we see the market continue to talk about what that's going to mean. And we're into earnings season. So we get lots of earnings coming out in the next couple of weeks. So I'd continue to be watching those numbers. Coincidentally, we talked a little bit with a lawyer who deals with insolvencies, and he said, Canadian corporate insolvencies are on the rise. So those numbers would be important to continue to pay attention to in the next couple of weeks to couple of months.
Yeah.
Yeah.
For sure. That was super interesting. Okay. Couple housekeeping things here, and then I'll let you wrap it up.
Sure.
This week we launched we're doing another ride for CHEO this year.
Mm-hmm.
It's a national bank initiative.
Mm-hmm.
We did that 100K ride last year. Don't
Yep.
think we're gonna get the 100K in this year. Not sure exactly what we're gonna do, but we're definitely gonna get out there and do something. So if anybody didn't see the email, please check your spam, because I know some people's it's been getting caught in there. But if you can go to our team page and donate, that'd be great. I think our goal is 1,500 this year, $1,500 raise. I think we're 30% of the way there. So
Yep.
we got a bit of work to do as
Mm-hmm.
far as that's concerned.
Yep.
Something else housekeeping. Oh yeah, tax season is winding up here.
Yep.
We have most of the tax packages out, I would say, if not all of them. Anything to expand on as far as that's concerned?
No, I'd say that, yeah, I think we've sent out most. If there is anyone waiting for something specific or has any questions, the one that has come to us most often is the management fees. It is built into the tax package and a little bit hard to pull out sometimes. So if there is something you want from us specifically like that, just let us know. We can strip it out and send it to you. And from the tax perspective, I know we've mentioned it maybe a couple of times on this call, but when you pull down the data from CRA, 99% of what you need gets pulled down based on your SIN number into your tax packaging, as long as you're doing it electronically, either yourself or with the accountant. So most of that information is going to be there, but we do continue to send those out so you or your accountant can kind of cross-reference those numbers if you need it. So certainly, if there's something you're waiting for from us, let us know. But I think most of the information you need is out or close to being filed in the system there.
Yeah, definitely.
Yeah.
Okay. Anything you want to wrap up with? Anything we skipped over?
I don't think so. I think just from the new issue perspective and bought deal, there wasn't a lot of money raised this week. Maybe a quieter week than in past weeks. No real bond issuance except for maybe Canadian Western Bank did a bond issuance today. So that was they raised some money there. So part of why I follow this and why we follow this is it's interesting to see what the liquidity is like in the market, where bonds are pricing, you know, how what the spread is between where the corporates are and the provincials and governments. So continue to follow that and seeing how much liquidity is available. But you know, still lots to pay attention to. Hedgeye did a investment event this week where they had Jim Chanos and Jim Bianco and Daniel DiMartino booth, some really interesting speakers, investors, and really what I took out of that event is for all of these guys, including Jim, who's been managing money for 40 years, one of the most famous short sellers, said, you know, this environment and this setup that we have is one of the most kind of challenging that they've seen in their history. And so we're working hard to make sure you're positioned for what we think's happening. And there was a lot of good information I took out of the event, and hopefully we'll expand and share more of it as we go. And I think the last thing of note, which we did last week, was we sometimes get these kind of reoccurring questions that clients come to us with, and we've put out a couple of 1, 2, 3 minute videos on, you know, mortgage rates was one of the questions we had. So we've put that out on the YouTube page. And if there's something specifically you'd like us to wrap up and do a quick video for you or for your kids or friends, let us know, and we're happy to provide a quick update on things like that.
Sounds like a great idea, actually. I like that.
Nice.
Okay. On that note, big long weekend here, Easter weekend.
Mm-hmm.
Hiding the eggs with the kids.
Absolutely.
That'll be fun. You know what I'm doing tonight?
What's that?
Coupe Cheveux right there.
Nice.
Out of control. It's got a mind of its own now.
Yeah.
Right? Yeah,
Makes
right
sense.
from here. Yeah, exactly. You wish you had this much hair. Okay. Dig on the way out. Thanks everybody for joining, and we'll see you next week. Have a great long weekend.
Thanks. Take care.
Bye.
Bye.